Singapore water treatment firm Hyflux has finally reached a restructuring agreement with Utico after months of talks. The 400 million Singapore dollar deal will see UAE-based utility Utico buying a 95% stake in Hyflux.
Utico also hopes to have the suspension on trading of Hyflux shares lifted during the first quarter of next year. Gwyneth Teo explains.
Of the 400 million Singapore dollars in the deal, 300 million will go into Utico's subscription of a 95% stake. Utico will pay this amount in a combination of cash, deferred cash payments and preference shares. The remaining $100 million will form working capital for Hyflux. For retail investors holding Hyflux preference shares and perpetual securities, they have two options. The first is to receive an upfront cash payment of either $1,500 or 50% of their shareholdings, whichever is lower. The total amount paid out will be capped at $50 million. The second is to receive the cash amount in 5 equal installments over 2 years, with per annum interest on the unpaid amounts at 1.25%. The cap of $50 million remains. Utico will pay extra cash if it lists on SGX within 2 years. The amount will either be 4% of the issued share capital or $50 million, whichever is higher. If such a listing doesn't occur within 2 years, the amount will be $50 million. In response to queries, Utico says Hyflux will remain a separate company. It also says the deal is better for retail investors than the one offered by Indonesian company SM Investments. That deal was scuttled in April. However, Associate Professor Lawrence Low notes it is still not that attractive, given that these investors are owed $900 million in total. But it's still a way to bring the embattled company forward.
The most significant thing is how they continue to be a viable business, relevant to all the markets that they serve. The finance is not the important part. The business is the most critical part. And the success of Hyflux will depend on how Utico can bring Hyflux above the water again.
Now, a lawyer for Hyflux says that the company is hoping to have its creditors vote on this plan in February next year, latest by March. Now, this vote will include senior unsecured creditors as well as retail investors holding on to preference shares and perpetual securities. Utico develops water and power infrastructure in the Middle East. It first sent a letter of intent to Hyflux in April this year. Hyflux filed for bankruptcy protection in May 2018, and trading in all its shares and securities have been suspended since.